Perfect. So now that you know the DST, the Delaware Statutory Trust, exist, how did you begin to do your due diligence?
Well, I knew almost nothing. In fact, I didn't even know what the D and the S and the T stood for. So I had to memorize that. But because there's also Wyoming Statutory Trust as well. But I basically did a couple of things. I went to one of the seminars, if that's even the right word, where I'm from Orange County, Los Angeles area, where they actually give you a free dinner in exchange for introducing themselves. But I think they're more broker-dealers. They're not the Kingsbarn type sponsor where they deal with the investment from the bare ground on up and build something on it that then yields revenues. And I also did a lot of reading, and I also listened to a lot of YouTube videos. And what I was particularly interested in were the cons. Yes, I was interested in the pros, but the pros to me were somewhat self-evident because you could use the 1031 exchange process where you defer your otherwise capital gains taxes. So that was good because it provided me some extra money that I could invest. But even if I invested that extra money in dividends and interest, which I can't do, the IRS wouldn't allow that, it still wouldn't be quite enough money. Whereas Kingsbarn and the broker-dealers would present investments that had a slightly higher rate of return, maybe 1% to 2% higher on average. But that's a lot when you need extra money to finance a lifestyle called retirement. So that was primarily what I did, was just as quickly as I could become familiar with the industry to the point that then I could talk intelligently with people like you to see what you had to offer.